This morning I'm here with David Pereira from Troy City Mortgage. They're located in Fall River, Mass. And we're going to talk about everything mortgages. Good morning, David.
Yeah, hey, good morning. Thanks for having me.
Tell our viewers a little bit about your history in this industry.
Yeah, sure. So I've been a loan originator since May 2003. I've worked for a few companies over the past. Primarily, majority of my career has been on the mortgage broker side. So I own my own brokerage for 7 years now. What I love about being a mortgage broker is that we're not just committed to one institution. We're probably signed up with at least 20 different partners, and we can sign up with new ones every day if we wanted to. As products change, some of our investors like to take advantage of, some of them don't. So, we work with multiple different lenders and figure out what product is going to suit our customers' needs the most. That's what I love about being a broker. I love being in control. I feel like we have more control as a broker. Nationally, the consumer, ends up saving working with a broker as opposed to a direct lender or a bank. Okay.
So what financing options are available for people that want to build an accessory dwelling unit, also called ADU?
So usually the first thing I like to offer clients is either a home equity loan. If they have enough equity in their home to complete the project, that's the path of least resistance. Not everybody has the equity. What I find is that some people are still locked into their low COVID interest rates, and they don't want to get rid of those. So it's ideal for them to get a home equity loan or some sort of a second lien to finance the project. If that's not an option, there are some additional products available where they'll allow you to finance the construction costs. For example, there's a FHA 203k renovation loan. That one will allow you to finance up to 110% of the after repair value. So whatever that house is worth, they'll let you finance up to 110% of that to cover all the costs of the construction. That would entail one lien, one entirely new loan, paying off the existing loan to get the project financed.
So let's start with the home equity loan, and these are made-up numbers. So the accessory dwelling unit's I'm just going to use easy math. The accessory dwelling unit is going to cost $300,000.
Okay.
How much of that money can they borrow from their home equity loan? If they have $300,000 worth of equity in their home, can they borrow all $300,000 to build the ADU?
Up to, in most cases, 80% of whatever the house is worth.
Okay. So again, easy math. If they have a house that's worth $700,000 and they only owe $250 on it, there's probably enough room in there to get all $300,000 for them to build the accessory dwelling unit. And then their first $250,000 mortgage would stay in place.
Yep.
The mortgage rate would stay the same.
Yep.
And then the new note would have a variable rate with the home equity loan?
Either a variable or a fixed home equity.
Okay.
Yeah,
so that could be fixed as well.
Yeah.
And that has no payment penalty?
No.
So if rates come down a year from now, they can call you up and say, hey, I saw rates are at 4%. I'm at 6.5%.
Exactly.
I want to refi. It's going to lower their payments. And that's an easy process to do?
Very easy to do, yep.
Okay.
Yep.
And then the next option was what that you said beyond the home equity? What was the next?
So if you don't have the home equity,
you don't have the
to
equity
do the
built
equity
in.
line of credit built in, you can get a renovation loan.
Okay, so that's the 401, what is it?
It's an FHA 203k.
203k,
Yep.
okay.
That's the government sponsored loan.
Okay.
The main advantage of that type of loan, they allow credit scores down to 620.
Okay.
You don't have to have the best credit. And they'll allow you to take out up to 110% of whatever the after repair value or the completion value.
So the whole property? So if I have a house that's worth, again, $400,000 and I owe $350 on it, and I want to build a $250 ADU, they're going to count the value of the ADU with the $450 and then give us up to $110. So there'd be more than enough money to renovate, or if we needed to work on the house, do the septic or whatever, and do the ADU, there'd be enough money to do that.
Correct. Yep.
Now, speaking of credit scores, is there a way that you can check the person's credit score without pinging their credit?
Yeah, we do have the ability to do a soft credit check.
Okay.
No credit inquiries. We are able to look at the credit score. We have built-in models in our credit reports that can project what your score potential has as well.
Okay.
We can tell you step by step what to pay down. We do it with all our clients. Helps
Oh,
them.
so you coach them through that process.
Yeah, that's
So
part
you
of the.
do a soft check,
Yep.
and you say, hey, you're at XYZ, but if you get rid of these 2 payments, then that's going to move your points to here.
Exactly.
And how long does that take from when they pay that off to when those points move off?
Well, so it varies. So credit cards and loans, they work on a 30-day billing cycle.
Oh, so pretty quick.
So, I mean, it depends on when your billing cycle ends, and everybody's is different.
Sure.
So if your payment, posted to an account, say today, and your billing cycle ended in 2 days, well, then it should report next week. Other times, maybe you made the payment the day after the billing cycle.
Sure.
Now you got to wait the full.
Got it.
If we're in a time crunch, there are ways to do what we call a rapid rescore, and you can get that account updated in 2 days.
Oh, wow.
If you needed it. So sometimes with these tight timelines, contracts, etc., we have to resort to that.
Gotcha. So we have the home equity, we have the 203k. What other options are available to us?
Yeah, so Fannie Mae and Freddie Mac have the Homestyle Renovation Loan. It's very similar. The 2 main differences between the products: the FHA loan will only allow you to build an attached ADU.
Ah, okay.
Whereas on the conventional loans, they'll let you do a detached.
So the 203k, we can do a detached.
203k, you can do an attached only.
Oh, attached only.
Yes,
Okay,
on the
203K.
conventional loan.
Because it has to be a renovation to the house. That's why they make it attached.
Yes.
I
So
wonder if there's
on
any
the,
movement to change that. That'd be interesting.
possibly. I mean, this is all new.
Right,
So, a lot of the towns rolling it out February 3rd.
right.
So we might see some changes.
So talk to me about someone makes a call to you. Like, what's the best way to start with you? Call you on the phone?
Call me, text me,
Okay.
email me.
And then tell me
Either
what
way.
happens after that. What does that look like? Hello, and then take me from there.
It's just basic information that we like to obtain from our clients. 2-year job history, what's your credit like, how much you owe on your house. We'll do some basic questions up front and kind of pre-qualify them to see if there's even an option for them.
Gotcha.
If everything sounds good, we'll continue to the next step. We'll do a credit check, soft pull. Then we'll look at their tax returns, their W-2s, crunch the numbers, and see, what they can qualify for.
And what's the cost to do that first part?
Oh, so it doesn't cost the customer anything. So
Say again?
it's free for them to do
Okay,
that.
so the first, to get to a point where you can tell them if you can help them or not, is free.
Yes.
Okay.
Yep.
And then once you say, yes, I think you can help you with this particular product, what happens next?
So we issue them a letter, tells them how much they qualify for, and to get to the next step, they would have to connect with you guys, and we would have to get some numbers from you.
Sure. So proposal, written proposal, contract, plans, etc.
So if it becomes official and everybody wants to move forward, we're going to originate the loan. We're going to get copies of your breakdown of your materials, everything, etc. And we'll submit everything to underwriting. Have a credit, income, proposal reviewed up front. Everything looks good, we'll order the appraisal, make sure the appraisal, the after repair value is going to be there, etc., or the completion value. And then usually they'll close the loan and they'll disperse the funds in usually some phases.
Sure, as the construction's taking place.
Yep.
Yep.
So depending on if you do a HUD loan, they'll hire a HUD consultant. A HUD consultant is basically the eyes and ears of the bank,
Sure.
making sure the project gets done.
Yeah. So he pops in at certain phases and says, yes, it's framed, yes, the electrical's done,
Yeah.
etc.
He'll authorize disbursements, etc.
Yeah.
Yep.
What is the typical cost to close one of these loans?
So it's very similar to just like a standard refinance. Closing costs can vary depending on what the credit score is, how much the loan you're financing. There are fees like title insurance that's calculated based on how much you're financing.
Sure.
how much the taxes, the insurance are, so we can set up the escrow account. If I had to give you a range, it's really a tough question to
Is
answer.
it 2,000 to 5,000? Is it
No,
1,000 to?
so let's say if your average loan is, say, 700,000, you're probably looking at 8 to 12,000, depending,
And do they have ability to finance that in, or they have to have the money for that?
Yeah, that'll get financed in.
Okay.
Yep.
So they can. So the out of pocket's pretty minimal then.
Yeah, just an appraisal, out of pocket.
Yeah. And which runs what?
So for usually 700,
Okay.
roughly. And if we're doing a HUD loan, the HUD consultant has to get paid. He gets paid. They determine that because they're third party, so
Sure.
they'll determine their fee based on the project.
Okay.
The last one I did was 1,500.
Okay. So they're a little expensive then.
Yep.
Yeah.
So they got.
And the HUD, what type of loans are those?
They only step in for the FHA 203k
Okay.
loan.
All right. So if you're doing a 203k, there's a little additional fees, but it does allow you to go up that 100%, 110%.
And the credit flexibility too.
And the credit
Yep.
flexibility. But we are limited to attached products,
Yes.
not detached at this time.
Correct. Yep.
Right.
The other advantage of the HUD loan is they do have a much higher income to debt ratio limit. They'll allow you to go to 56% of the income,
Wow.
which is high. Usually on the conventional loans, they like to see that under 50.
Okay.
So sometimes that 6% can make a big difference.
Sure.
Yep.
Yeah. And so that obviously that's a big part of your job is coaching people through this whole process, saying, we need to move to this product, or this is going to be your best product to do this, or what are we trying to accomplish, etc. So you're really the quarterback and the coach behind the scenes. And there's you don't have a fight in the game. There's no financial incentive for you to place them in one product or another.
No.
So-
We get paid the same no matter which product you
Right.
pick.
So you're getting paid on the dollar amount of the loan, regardless of where the financing comes from.
Right.
Okay.
Yep.
And so let's talk about time frames. I know we talked about quickly, but from phone call to initial credit letter, we think we can do this for you. How many days is that, or how long does that take?
Most of the time, it can happen fairly quickly. It really depends on how organized the customer is.
Yeah. So let's pretend
So,
they have all the answers.
Best
you
case
need.
scenario, same day.
Wow. Okay. So if
best
they
case
really
scenario.
know the answers to the question and they're organized, it can be 24 hours.
Be 24 hours, yeah.
Yeah. Now let's talk about some scenarios. So let's pretend the daughter owns a house in Middleborough, right, and wants to build an ADU in the backyard for mom, right? Mom lives in Bridgewater. She has a house. They have good equity in that house, but they don't have any cash, and they want to bridge the gap to build the ADU and then sell the house over here and pay down or pay off the note. What does something like that look like? How can that be accomplished?
Something like that, I would probably recommend that we would try to figure out where the cash can come from first. So maybe the mom's house, maybe do some sort of an equity loan on that home to raise the cash,
Yep.
pay that loan off when the property sells. If that's not an option, we can see how much potential equity do we have to work with in the subject property. At that point, we would either propose either a line of credit, a refinance, and if that doesn't work, then we would propose the renovation loan, which allows the higher loan to value
Sure.
to get them that money.
Okay. And could there be two loans in that scenario if we needed to? Where this
Yeah.
one, let's pretend the mother only qualified for 150 and there was 150 over here and they needed the 300. You could do both of those, right?
We could do that, yeah.
Okay.
So we would write the primary loan under the daughter's name,
Yep.
and the mom could gift her equity
Ah.
to the daughter.
You have a lot of creative ways to get things done.
You got to ask a lot of questions.
Yeah, yeah.
Yeah.
And do you feel like that's your strong suit, really being creative with these loans?
Yeah. You just got to know what to ask the customers and then advise on what we feel is the best, path for them.
Right. Now, what if the mom's house is in Michigan? Can you still do that deal?
No, I'm not licensed in Michigan.
Okay.
But
So what states? That's a good question. So what states can you operate in?
Mass, Rhode Island, Connecticut, Florida, New Hampshire.
Okay. A lot of questions I get from customers. What's the ADU going to do to the value of my property? And my answer is always it's going to go up.
Right.
But I mean, what do you tell clients when they ask you that question?
That's a long answer, and this is what an appraiser would say.
Yep.
Because the ADU thing is so new,
Right.
there really isn't any. So I think
Well, there's one in Plymouth.
Yeah, yeah. So the way that appraisers determine what homes are worth is based on what similar types of homes have sold for.
Sure.
So they're going to have to get really creative with these appraisals. Yeah, it'll definitely increase the value of the home. By how much? It's going to be based on what the appraiser can find for sales. I mean, they're probably going to have to compare it to like two-family homes.
Sure.
Multifamily homes are going to have to step into play, or go to other towns, look further back in time.
Yeah, I mean, there's ADUs have been, on the Cape for quite a few years now, so there has to be some sales.
Yeah, yeah. So they'll have to go back further in time, for, look in other towns, increase their radius,
Sure.
to try to pull that data into, how long did that house sit on the market for, to kind of demonstrate what the marketability is. So that'll be interesting to see, how that'll play out with these appraisers.
Right.
And I tell everybody this: every appraisal is unique. Very rare. I mean, unless you're building cookie cutter homes, but when you're building appraising, these beautiful homes that have all this extra work, a finished basement, in-laws, it's a different approach. That they gotta. It's a little bit more work involved.
What are the questions that you typically get from homeowners that it'd be good to answer now? Like, kind of coach me through what you hear over and over again that people, would want to hear the answer to.
What's my minimum credit score requirement have to be to qualify for this?
Okay.
And I tell everybody, well, the minimum for the government loan is a 620. The conventional loans, they tend to require a higher credit score. They do say they go down to 620, but when we run those loan applications through their automated underwriting system, it's difficult to get an approval unless you have a higher credit score, lower debt-to-income ratios, cash reserves. So there's really no definitive answer on the conventional side on what the minimum qualifications are.
So what's a good guideline, like 680?
I tell, yeah, at
700?
minimum 680 to submit it. Lower debt to income ratios, and then we run it through the system to see if we can get an approval. A lot of people ask, how much cash can I get? What can I work with? That's probably the number one question. Other than that, it's most people do ask, hey, can I get access to this money? I don't want to lose my my 3% interest rate. That's my concern.
Sure.
That was one of the concerns with one of our customers that we spoke to that you referred over. She just did not want to lose that low rate, and it was a big loan too. And when we did the math, the monthly payment was going to increase a lot.
Sure.
So that's a big concern. So hopefully with interest rates, if they come down in the future, that'll help alleviate that.
Right. And what would you say that amount of to date with the ADUs? How many of them have you talked to that you're just not going to be able to make it work? I know it's so new.
I've had, in the last 60 days, I've probably had 3 inquiries. The first person I spoke to just didn't have the credit score to qualify. They were below the 600s. The next customer I spoke to, she was self-employed. But even if she was, in her income, she didn't really. A lot of self-employed people
They don't report it.
show the most favorable income. But in her case, she was concerned about the payment increase because of the low rate they had on the first mortgage.
Sure.
The other scenario was the mom just trying to figuring out if it's worth it to finance it or just pay cash up front. Other than that, I haven't really had a lot of people looking into it because it's such a new topic.
Sure.
But it is it is coming up more and more.
So talk about your team behind you. Obviously, you have people that are working behind you. What does that look like? I mean, obviously, you're not the one running all this paperwork and all those things.
Definitely not. I have a great team behind me. So I have a full-time assistant. He helps with all my day-to-day, upfront things with new clients. My operations staff, I have 2 full-time processors that help coordinate things with our lenders. There's 12 of us total on our team. We have 6 other licensed loan originators that have been doing this for years.
So when they're calling you, they're really calling a team of people.
Right.
You're the pretty face to the phone call,
Yeah,
right?
yeah.
But there's a whole team of people with lots of experience behind that phone call that are all working towards getting that loan approved for this client.
Yes. The renovation loans, we've got a lot of experience with those. As long as we get the paperwork that we need from the contractor, they can go through pretty quickly.
Is there a cap on those 203k loans?
Yes, it's got to be under the county income limit.
Okay.
Loan limit, I apologize. So the county loan limit. So we would just have to look at each county.
How long does it take for that 203k loan to get approved?
I would probably say on average 45 days,
Okay.
give or take.
So
depending
once you
how-
have all your paperwork, it's about 45 days.
About 45 days in it
And that's to close?
to close, yes.
Yeah.
Sometimes it can take a little longer, and it really depends on what the HUD consultant, we have to basically revolve around their schedule. They have to submit a report to us, and sometimes those reports.
So they're involved in the beginning too.
Yeah.
So they look at the plans, the specs, and all that ahead of time.
Yeah, so they're looking exactly. So we send them the plans and specs, and then they write up a report for us that our underwriters need.
And they're assigned randomly?
Yeah, you hire them independently.
Okay. But you hire them or the people hire
The customer hires
them? So
them.
the customer, do they get to pick one or are they?
They can pick one.
Okay, that's interesting. Okay.
Yep.
So now they've closed the loan. 45 days is up, we've closed the loan. They're not paying interest on that loan until they start drawing the money, correct?
Right.
So it's interest only during the construction
So that
period?
money is actually held in an interest-bearing account. So it's earning money, and they only pay interest on what they draw on.
So now the job's done. We've drawn all $300,000. What happens to that loan then? How does that convert into a fixed payment?
On the FHA loan, whatever the loan amount is up front, they stop paying principal and interest on that fixed amount from their first scheduled payment. It's on a new construction loan where they only pay interest on what they draw.
So on the 203k loan, we
Yeah.
close at $300,000. They're paying the $300,000 fixed payment from
Up
day
front
one.
from day one.
Right. So
Yes.
it's important for the contractor to get going
The timelines, everything.
and get
yeah.
that done because every day they're paying principal and interest on that money and they can't use the product obviously till it's done. So let's talk about a next scenario. So they've done a home equity loan. That works different, correct? On the
Home
interest.
equity loan is different.
Yeah.
Home equity loan, you only pay interest on what you borrowed.
Okay. So that's an interest only loan for the life of the loan.
Interest only, anywhere from, I've seen equity loans have an interest only period of 3 years, 5 and 10.
Okay, so that's known up front. You say we're gonna go
Yeah.
we're gonna go interest only, again made up number for 5 years, and then in the 5th year it's gonna convert to whatever the rate is at that
Right.
time to a fixed payment, principal and interest.
Yeah, the most common one is 10 years.
Oh, 10 years. Okay.
10 years interest only. It's open-ended for that first 10 years, meaning you can pay it down, use it, pay it down, use it as many times as you want. And you only pay interest on whatever you're borrowing.
At that moment, whatever you owe.
Yep.
So in that scenario, daughter's here, mom's here. Daughter has plenty of equity in her home. That's going to be the least expensive way to proceed.
Yeah.
Get a home equity loan, build the ADU. As soon as the mom sells her house, they take the funds and pay down that loan as far as they can, or to zero, hopefully.
Yep.
And at that point, the home equity loan's still in place, but they don't owe anything on it, so it doesn't cost them any money.
Right.
Now, if it's at zero for a certain amount of time, does the bank rescind it?
That's case by case. I have seen them reduce the
amount that they can pull?
amount that they can borrow.
Yeah.
Yeah. But I haven't seen that happen in a long time.
Okay.
Usually, I seen that happen years ago when the market was depreciating.
Sure. They wanted to
And
get
they
it
were
off the books.
minimizing their risk.
Right.
Yeah.
So in that scenario with that home equity loan, as the rates fluctuate, their payments fluctuate.
Yes.
Right.
Yeah.
And there's no cap down or up.
Yeah, there's usually interest rate caps.
Oh, there are.
Yeah.
Okay.
Yep.
So it can only go up a certain amount and it can only go down a certain amount.
Right, right.
Again, made up scenario, interest rates are 6.5 today, and the floor of this home equity loan is 5, and interest rates go back down to 4. They can obviously come see you and refi that home equity line.
Yes. Yep. Home equity lines of credits are open-ended. Those are the ones that you only pay interest on what you borrow.
Okay.
Home equity loan, that's usually a closed-end second, or you borrow X and you're paying that fixed payment every month, regardless of how much you've paid it down.
Okay.
So that's the two key differences.
Right.
You're locked into a fixed rate with the home equity loan,
Right.
and if you pay it down sooner and you still owe a small balance, you're still making that original monthly payment.
Sure. Yeah,
Yep.
the payment doesn't vary.
Right.
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 But all these products are refinanceable or you can extinguish them by paying them off at any time.
Yes.
And there's no
Yeah.
prepayment penalties in any of these products.
No penalties. No.
So very fluid. So the secret, sounds like to me, is to deal with someone like yourself that really knows what they're talking about,
Yeah.
that has a team behind you, and you've seen all the scenarios, and we can play what if and move the chess pieces around to make it all work.
Yeah, absolutely. Yeah. We just want to get them whatever's going to work for them, with the most favorable terms.
And so again, the most important thing is if people are looking for a loan, pick up the phone, talk to you. This is what I'm trying to do.
Yep.
Can you help me? And you're going to get them an honest answer.
Yep.
So the best way to get in contact you is what?
So you can call me at 508-207-5864. You can also visit our website at www.troycitymortgage.com. Feel free to give me a call or a text at that number. You could also email me, david@troycitymortgage.com.
Awesome. Well, I appreciate you coming in today, and I learned a lot.
Yeah, it was a pleasure. Thanks for having me.
Awesome. Thank you.